Hey, good morning, everyone. Sorry about that. 7:30 kind of snuck up on me. Usually I have it turned on a little bit early. Thank you for taking the time to join us live. It's always appreciated when you take the time out of your day to do that. And you know, we appreciate it a lot when you take the time. And so what we're trying to do is find ways to kick out more information to you intraday and on a more consistent basis without wearing you out. For a long time, um, I tried to do this once a week because we try to make it really relevant and we try to kind of synthesize everything that happens. But um, things are happening really fast, and so we're trying to find ways to get you current intraday without um, kind of diluting ourselves down. Right? It's really hard because if you hear the same thing from the same person um, every single day, you tend to tune it out. And I think that's really dangerous because there will be some days when we sit back and say, hey, this is really, really important. So if you haven't already, make sure you join our Facebook group. Jeff and Phil post a lot in there throughout the day. Look for us on Twitter and look for us on TikTok. We're trying to put out information on all of those mediums that cover different things that we're just looking at. I think it'll help you get educated on what we're doing, and I think it'll help you stay connected and in tune with us a little bit more closely. So with that, we're going to spend a few minutes today really drilling into wheat and into corn. Um, and as we do that, I want to frame up the fundamentals that are shaping up around the world. The USDA gave us a report last week that I think was really actually bullish. And I know that we've sold off on Monday and Tuesday here, but I think traders are starting to really engage on the balance sheet of corn and soybeans. And I think they're starting to turn their interest away from the inflation game, or they're starting to um, uh, I guess not buy in as deeply to the recession talk and into the inflation is dead talk. Because the reality is we're printing money at a faster rate than we ever have, and we continue to pass policies that are inflationary. So they can tell us that they're defeating inflation all that they want, but at the same time they're just making it worse through their policies. So I don't understand why the market is doing what it's doing, because fundamentally in the grain complex it's really bullish. In fact, it's more bullish today than it was in 2021 and in 2020. And here's why. The balance sheet that the USDA kicked out a couple last week put the national yield at 175 and a half, and they came down from 177, and they did that on based on the farmer surveys that were due in August 1. Well, if you remember, the heat had just started to really impact Iowa and Illinois, southern Minnesota, and some really key production areas. We know that there's problems in Kentucky and Ohio and Indiana. We know that Kansas, Colorado, Texas, Oklahoma, huge portions of Nebraska are all severely damaged. We know this. That's a fact. The market knows it too. In fact, the estimates are somewhere between 400 and 900 million bushels are lost just in the Western Corn Belt. And so there's this huge debate which is, can the Eastern Corn Belt replenish it? Well, they can make a big difference, but what the market's really thinking about, I think, right now is demand. And there's this perception that demand is lower than it has been. So now you got to back up and you got to look at the global situation, and you got to realize that Europe has a total disaster on their hands. The Ukraine shipments, even though we are shipping some, are far below expectations, far below historical averages, and we're not getting any production information out of them. We have no idea how many bushels they actually have. You've got severe drought in China, so their crop is getting smaller, and you have extreme too much moisture coming out of other parts of the world, like in India. So the supply side is shrinking, not growing, both here and abroad. The demand side is picking up because all of the margins are improving all over China, and Brazil is exporting corn at a faster rate than they ever have. In fact, they're almost double their export pace than they were a year ago. So so all of that, what that all tells you is that supply is shrinking and demand is at an all-time high. I mean, it's roaring. Look at our energy markets, right? It just keeps on getting more and more bullish. So you say, well, why aren't prices starting to really engage with that? Well, I really think it's coming, and I think that that in corn and beans, the highs are absolutely in play with this situation, but I don't know if they're going to be in play until maybe October, November. But let's dig into wheat because I think this is a really important chart to get your head around. So this is the what do I have here? I have the weekly chart of wheat. Here is. Oh my gosh. Okay. Have I been muted the whole time? I don't think I've been muted the whole time. I think I just accidentally pushed the button the wrong thing. So, okay. Let's dig into wheat here, okay? I want to look at the monthly chart of wheat first. So this is your monthly chart of wheat, and I started it at the beginning of what we would call the major rally, okay? Which was September of 2019 is when wheat bottomed at 361. So this entire move to the upside, you can see it in perspective all the way back to 2008, okay? We peaked out at almost the exact same peak on the continuation chart that we had back in 2008. Now, look at where we're settling because I think this is really important. We're settling right at the 50% retracement mark of this entire move, right here at 878. Now, let's drill in a little bit tighter time frame, okay? This is your weekly chart. You can see 1, 2, 3, 4, 5, 6, 7 weeks of consolidation right on top of this line. And if we dig into the daily chart, try to make this as simple as possible, what's interesting about this chart, okay, is look at the amount of time that we've spent on either side of the 50% retracement line. Now, also look back to late last year and look at where look at the level that held wheat for a long time. This 850 level has a peak here in November, has a peak in December, has a peak in early January, and it has a peak in February, okay? So that's 1, 2, 3, 4 significant peaks. And at the time, remember, this was 100% of the move. This was the high end from the, think back to the weekly and monthly where I started. This was 100% of the move. Now it's just the 50% point, okay? And what have we done? We've fallen back to it, and we've consolidated for a very long time. But what's really interesting is these last 5 days, I think, have been extremely important because what we've done, and if you look at these two bars right here, let me zoom in so you can see them closer. What we've seen are these two long lower shadows where we've fallen below the 50% level and rejected it twice. Yesterday we tested it again, and today we're pulling back up away from it. The bulls and the bears are fighting at this level, okay? And at some point, one of those two groups is going to win. And I think it's important to realize that this whole time that we've been consolidating, we've spent far more time below the 50% mark than we have above it. And we've failed to make new lows since mid-July. So we've failed to attract new selling down below these peaks that are so important at this 850 level. Every time we go down, it's getting bought. And if you dig into the numbers related to who is buying and who is selling, it's the big smart money that's accumulating positions down into this area. Okay. In fact, they never exited their position. They just continue to accumulate more. Well, why would they do that? Well, it's because they're looking at that big macro picture that we're talking about, where we are shrinking global food supplies, and fallen victim to just political headlines. So that's creating a lot of the volatility that we shouldn't see. So I think that the next move in wheat is going to be up, and if we do break a short move to the downside, it's going to get gobbled up and bought again as it comes down into this 750 level if it were to break out the bottom side. So I think wheat is something to be very, very patient about. I think it's going to push higher. I'm not saying wheat is going to go up to the back up to here, because I think we have to go ruin a crop before that happens. I think somewhere we've got to contract supply a little bit more for wheat. But if corn starts to move, and let's flip the chart now to corn. If corn starts to move and gets excited, then wheat is going to go with it, and vice versa, right? Because they're relatives. Corn, we've been seeing and selling basis levels in corn in western Kansas that are absolutely unheard of. And so there's lots of talk about, well, why is that? Well, oh my gosh, it has to just because freight is hard to get, and that's driving the basis. And that just doesn't make a whole lot of sense, because basis is an add-on to your corn price. And feedlots give you the price with freight in it. So you're actually paying the freight, right? If freight goes up, your basis goes down. And that's not happening. We're seeing fuel prices contract and basis rally. So the argument that freight is unavailable and freight is too expensive, I don't think is the cause. I think that the cause for the high basis levels is shortage. We've seen relatively high basis levels for years in Southwest Kansas, going all the way back to the 18-19 crop year. And basis levels have been higher than they probably should have been. And the reason is because our crop isn't as available as the USDA has been saying it has been. So I think corn is in a really interesting situation. We keep consolidating right around the $6 level. We've been saying for several weeks that anything above the bottom end of this range right back in here should be owned. I think we're 100% still on board with that conversation. And as the fundamentals become known and we kind of get through some harvest pressure, I think corn ought to really rally. And another thing to look at on corn, and credit Phil here for bringing this up, is the Strategic Petroleum Reserve. We've been draining that reserve 1 million barrels a day in order to decrease the price of oil. The bill says that once the government stops draining the reserve 1 million barrels a day, it's required to refill it at a rate of 1.5 million a day. So that's a 2.5 million bushel supply shock or demand shock to the market in order to replenish it. So what typically happens when the government misuses a reserve like they're doing, which the reserve is not for price control. The reserve is for economic sustainability, right? It's not to just decrease prices. It's to ensure that we're free from other countries taking advantage of us, right? And so when we turn that buying spigot back on, it's going to rally, and corn has to go with it. It has no choice because corn is fuel with it. So I think you've got a lot of things developing in the corn market that are going to be very, very bullish soon. And I do think it puts this 766 high in play. Lots of hurdles to overcome first, right? You got to overcome 642. You got to overcome 657. You've got to overcome the low here at 682. So lots of hurdles that corn's got to overcome, but the fundamentals exist for it to work. And I think that they're much more compelling than the fundamentals of nobody needs corn anymore. The USDA is overstated on its demand, and this crop is getting bigger. I just don't think the fundamentals are there to support that narrative. Now, soybeans, what about those? because gosh, don't we have plenty of them? Well, on the USDA's number of 51.9, I can read analysts that say, no, we're at 50, no, we're at 52. But really, I think the number that the market's going to start focusing on is the demand side. And just like corn, the demand for beans is not shrinking. It's actually getting bigger. And with the aviation mandates that are out there, the demand for soybean oil is going to continue to increase. Remember, in order to keep up with the jet fuel demands that are out there, we're adding an enormous amount of soybean demand to that crop space. And I forget exactly what the number is, but we need like 15 or 20 million acres of soybeans just to be available for jet fuel moving forward in order to run the engines under the new mandates. So I think beans are basing here. Yes, we're trapped in this huge range, but let's think about it. We've gone nowhere since July 1. We're trading at basically the exact same level. We've gone nowhere and we've gone everywhere at the same time, right? I think beans are finding a base here today, and I wouldn't be surprised to come see us challenge that 1465 level again. Anything below yesterday's low, and certainly below this swing low right here at 1356 would cause concern, and I think would tell us that maybe we need to rethink that analysis. But I just don't see it. And I've been reading stuff for 4.5 hours here this morning, and I just don't see anything that's out there that is compelling to say, oh my gosh, food demand has decreased by a billion bushels of soybeans. I just don't see it, which is what I think we would have to have in order to push this thing way lower. So I hope that is somewhat helpful to you. I know it's painful to sit through big down days, but with big price expanse comes high volatility and comes a lot of misinformation and confused people because they just don't see the ball very clearly. And I don't think that the fundamentals are any different today than they were here, than they were all the way back in here. So we've consolidated for months at the top end of the range, and I think that means the most likely next move is back to the upside, and we'll see if we can't clear some of these hurdles and put these highs back in jeopardy. I'm not saying that happens today, guys. I think it might happen out in here, and there's a chance we could dip a little lower in order to do that, because they're not just going to sit here and do nothing. So they may bounce around a little bit more, but eventually I think these catalysts catch up with us and propel us on up, back up to this level, or maybe more. We just don't know. All right, 748. I've thrown a lot of words at you. I hope it was somewhat helpful, that you can see exactly what it is that we're looking at. Support is holding. I don't see anything on the horizon that tells us we should run for the hills on these things, and so I would stay the course and stay long crops and long everything. All right, there is significant risk trading futures and options, and you should only do so in light of your own financial condition, and with the help of your advisors to do what's best for your farm. If you need protection because you're worried about you're not sleeping at night or whatever, call us. We're happy to talk through it with you, and make sure that you've got some downside, but your upside is also available to you as well. Hope you guys have a great week. Again, check us on, join our Facebook group. Make sure that you are watching TikToks and all those kinds of things, as we try to communicate more frequently with you throughout the week. And we will talk to you next Wednesday. Have a great day.